Hi, I'm Lisa. If you're new here, don't forget to subscribe and hit the notification bell. Today, I'm coming to you with essential steps to get your investing journey started off right. Whether you're just starting out or you've been investing for a little while now, these steps will help you to avoid costly errors while on your investing journey. So, number one on the list is not doing your research. This is one of the biggest mistakes that new investors make, jumping in and not knowing much about a company's long term potential. So, you're going to have to take the time and find the research tools that can help you to analyze a company before making any investment decisions. This is something that I definitely did in the past, adding things to my portfolio without a complete plan. And some of the things that I was investing into were not things that should have been added to my portfolio for the long term. They were trades, not investments. So, number two on the list is emotional investing. Another very common issue for investors. As people, we're often led by fear or greed when making our decisions. This can lead to impulsive buying and selling. It's essential to stay disciplined and stick to your investment plan and basically have an investing plan, which many people do not. You have to stick to it even through market fluctuations. You can't let your emotions overwhelm you and cloud your decisions. The decision has to be made ahead of time. So, this is something that I'm definitely implementing right now in my investing strategy. If it is truly an investment, like my Apple and my Amazon, I do not have a stop loss set. I'm holding those long term. But if I bring something into my portfolio that I'm not sure is going to be a long term investment, I'm adding it to my portfolio with a plan, with a stop loss, with my mind set and a strategy set on how I can mitigate any potential losses. All right, so now let's move on to number three, and that is lack of diversification. This is putting all of your money into one asset class, one particular stock, which is going to expose you to a higher risk because you're not diversified across various sectors and industries. Diversification helps you to reduce the impact of any one particular investment within your portfolio. So it's something to consider diversifying across different sectors and asset classes. And I do this throughout my portfolio by having a high percentage into, for example, ETFs like VOO that give me exposure to the Fortune 500 companies, not just tech or healthcare or financial. So many other sectors are included within my investments. So, on to number four, chasing hot tips and trends. So, we can't just hear about something on social media or from a friend and think that it's the right investment for us. While it may be tempting to jump into whatever meme coin you're hearing about on the news or when you're chatting with someone at the gym, it's essential to conduct your own research and understand the fundamentals of the company. Investing just based on hype can lead to significant losses. And I think a huge obstacle with jumping in on a cryptocurrency, for example, that you heard about, if you don't know the full investing or trading strategy of the person that you heard it from, when did they buy? Are they holding long term? When do they plan on selling? Do they have a stop loss set in place to sell for them if the price drops by a certain amount? Without that type of knowledge and a plan, you can lose money if you just jump into something that you heard about as a beginner investor and have not created your own strategy and plan on how you are going to incorporate it into your portfolio. Okay, so point number five is overlooking fees and expenses. This is something that I often touch on: expense ratios, brokerage fees, trading commission fees. These are things that can eat at your bottom line profit that you think that you are going to be achieving. The fees will be eating at your returns. So we have to be very mindful of all these things when we are choosing our investments from the start. Even if you just have a few $100s, a few $1,000s, versus when you hit that first $100,000, we don't want to be losing a high percentage of any amount that we have invested if there are alternatives that have a lower expense ratio, lower brokerage fees, for example. All right, so number 6 on the list is something I've already been talking about a little bit. Not having an investment plan. This is a critical mistake. You have to take the time to outline your goals, your financial risk, your investment strategy, and not make any impulsive decisions that can lead you to deviate from your long term investment plan. All right, so on to the last point, number 7, ignoring the power of time. As a beginner investor, you may not realize the power of compound interest. You may be underestimating the importance of starting early and keeping your money invested long term. So basically, the earlier you start investing, the longer your money has the time to grow. Don't wait for the perfect time. Don't wait to build up a certain amount of money. Get started investing as soon as possible because once you get that money invested, it'll be working for you and working in your favor. If you're not already, make sure to subscribe to the channel, like this video, and hit the notification bell. Check out my beginner playlist for other videos that can help you if you're just getting started on your investing journey. Use my referral links that'll be pinned in the top comment and in my description. That's my beginner investing blueprint. Work to avoid these common mistakes and set yourself up for long-term success. Do your research, stay disciplined, diversify your portfolio, stick to an investment plan. Investing is a journey, and learning from your mistakes may be part of the process. But I believe if you incorporate the things that I mentioned here, you will be mitigating potential losses from mistakes that many people make on their journey. Thanks for watching. I'll see you in the next video. Okay, bye.